Evening, guys. Welcome to this latest live. Hopefully you can hear me all okay. And a few people say sounds a bit quiet. Obviously there is volume controls, but this might make it a bit better. Here for 30 minutes. I will try and answer as many of your questions as I can about money. You can ask other stuff and maybe I'll answer it if I can, but we're focusing here on personal finance. A quick reminder to you, if you are early ask a question, the better chance you've got of me answering it. If you miss it, if I miss it, whatever reason, or you're watching some replay, the best place to ask me a question is over in the Facebook group, becleverwithyourcash.com/community. It's written there at the top of the screen if you're watching on YouTube. Head over there, join there. That's a great place to ask questions. So if we don't get around to it or you're watching this later, that is a great place to go. So we've got a question already that has come through from NLS. So, hi Andy, I hope you are well. Question, I've received my £200 NatWest switch today. Do you have to disclose this to HMRC as money gain for personal savings allowance? Thank you for reading. So no, I've been looking into this recently as well, just double checking on it. And it seems the advice from the HMRC is that the switching bonuses, they are not taxable. That is not something you're going to have to put in your self-assessment forms or bother about. That is just money. That is yours. What you might need to think about in terms of tax zones will vary. I'm going to look into this in more detail, maybe write an article up about this, is some of the rewards you might get. So the Halifax reward, for example, you get this via the Halifax reward current account. It can be a cinema ticket. Obviously, that's not taxable. You can get a £5 reward. That £5 reward you get is actually already minus tax. It's actually £6.25, and they take 20% off that and give you a fiver. So in theory, if you're a high rate taxpayer paying 40%, you're going to have to really put that in and pay the extra tax on it. If you don't pay any tax at all, then you'll have to claim that £1.25 back if you want to every single month. Obviously, so times 12. Maybe you think it's worth it. If you have 3 of those accounts, maybe worth it even more. But that's the rules there. Let me quickly just check here on Instagram because they whiz past on Instagram. Don't give me a chance to actually see stuff. So Hoshcott says, are there any issues with the HSBC applications? I'm still waiting for my application to get improved since 20 days. So I have seen a few people talk about getting rejected for it. It is historically has been one of the cards which has been harder to get. And perhaps right now, because it's a big offer, that 200 quid plus, go via cashback site, you get an extra 40 quid plus. If you're new to the cashback site, I'm hopefully going to get a welcome deal back so you can get another tenner on top of that. Although those welcome deals can be beaten just through generic purchases if you've got something to buy. But if you just want the switching offer, that's quite nice. So keep an eye on the website for that. Actually, the newsletter is a place to find out if I get that deal back. But maybe because of that, it's maybe been really popular. So maybe there's getting a lot more people applying for it. Plus you throw in that 3% interest up to 10K, limited access, plus that 5% regular saver. Anyone else had issues with HSBC, whack it in the comments and we can sort of share that as an issue. But if it makes it any longer, maybe see if you can get in touch with them, see if they can give you any more information. So Teeny Adventure says, hi Andy, please could you explain ISA transfers? Looking to transfer a Virgin Money 3% Flex ISA. Transfer to a Virgin Money 3% Flex ISA. Have a Flex ISA elsewhere and withdrawn all the money for the moment as rates are better and had planned to put... Feels like there's a half a question still to come. Anyway, but I know what you're saying. So ISA transfers. This is really, really, really important. I've actually opened up as well that Virgin Money 3% ISA. It's a really, really good rate for a cash ISA. I may well at some point transfer that cash ISA into investment stocks and shares ISAs, but I thought I'll get it in there just to hold the money in ISA for the moment, for the allowance. And 3% is better than you can get anywhere else. Better than you can get on an easy access account, really. The other ones have kind of got restrictions. When you transfer an ISA, what's really important to do is something I think you might have done here. It's important you don't withdraw the money from your original ISA, the one you've got at the moment, and then aim to pay it into the new one. Don't do that. If you do that, if you withdraw the money out and then pay it back into the new ISA, you're taking the cash out of this year's ISA allowance. You get £20,000 allowance every single year for your ISAs, all your ISAs combined, okay? Not just your cash ISAs, lifetime ISA, stocks and shares ISA, innovative finance ISA, all of that combined together. So let's say you've got £25,000 in your ISA and you withdraw that, you take it out and then try to pay it into the new ISA. The most you can put in is 20K, and that is in the whole year. If you've already put, let's say that of that original 25, let's say 10 of that has been this year, well, that's half your allowance has gone. So in fact, all you'd be able to put into this new ISA would be 10K. So what you do instead is a process called a transfer. And this is where you go to your new provider. Most of the time you can do this online. I had to fill in a form. I had to go to my Virgin Money branch, get a form, fill it in, then post it off. For the bank that I was with, Synergy, because they weren't on the list. So most of them, they can just do it automatically, transfer it when you open it. Other ones, you have to fill in a form and it takes a bit longer, up to 10 working days once they've got the form. So this could take me about a month for my money to move across, which is very frustrating. But when you do this, when the bank moves the money for you, it doesn't mess with your ISA allowance. So that 25K in the old account moves over to the new account and it hasn't touched this year's allowance at all. So let's say you had spent 10K this year, you've got another 10K you can put in. So hopefully that answers that for you. Hopefully you haven't actually withdrawn the cash. It does sound like you have, in which case I'm hoping you haven't got more than your ISA allowance. Obviously, if it's £5,000 and you're not likely to find another 15K to go into ISA this year, it doesn't matter. You can just move it over. Right, let's jump back on to questions here. So Steve OGB says, hi Andy, I had 2 hard credit checks in the space of a week as going abroad next week. Got the Barclays card, credit card, and a new EE contract. I'm now looking to do a first direct switch for the £175. Is that a good idea? So this is the thing about credit searches, hard credit searches. The general rule of thumb, the advice you'll get from the credit reference agencies is to space them out. Do them every 3 months, maybe even longer. And if you've got anything major coming along, you've got a mortgage or a remortgage or a balance transfer credit card that's really important, or maybe you got your eye on another card because you want to get a cashback card or stoozing or something like that. If there's anything coming along which is you think is vital, then it's best maybe sort of holding back and not making the applications, particularly when it comes to mortgages. They say 6 months with no other hard searches. But if you've got nothing else really going on and your credit score is pretty decent, then potentially it won't make too much of a difference. When you make the application, yes, your score will drop a little bit, but it shouldn't make too much of a difference for a current account. I can't promise it. It's going to be different on every single situation. And sometimes it's not even about your credit score you get rejected on. It might be rejected on other things when they're looking at in your application form. So there's no guarantee that you won't get rejected. But if, let's say this, you've got the EE contract, you've got the credit card, and then you get the bank switching deal, if that's it for a while, I personally would do it. But again, every situation is a little bit different. And I have done in the past, in a month, 4 or 5 different credit checks. So, newer utilities, credit cards, banks, things like that. I have done it. No guarantee it's always going to work, but I think you'd be okay. Celestial Alexia, hello. Hi Andy, I know until recently you didn't recommend fixing unless it was for less than 1 year. What do you think now? I've been looking at a 3-year fix. So I've written I don't know if you guys know this, I write a column for the Metro every single Monday. And I write it a week in advance. So that my column next Monday is going to be about fixes, actually. I did talk about this in the savings update video that I published last week as well. It's got more information there if you want to check that out. But broadly speaking, it does look like we might have peaked when it comes to fixed rates. A month ago, 1 year fix would be 4.65. Now it's 4.32. In fact, it could well have changed in the last couple of hours. So they're on their way down. Similarly, the best 2 year, 3 year, 4 year, 5 year fixes, they are dropping down. If you are happy to lock your money away, you don't need it to be accessible, then maybe it is worth grabbing one of those fixes right now, because I don't think they're going to get any higher. The risk obviously is that they do get higher. So you have to sort of play up that. But the rates right now, they're still pretty decent. So, if you can afford it and you won't need the money, then maybe it's worth doing that. Andrew says, hi Andy, are you well? Yes, I am. Thank you. Is it worth closing or switching my Virgin Money M Plus current account as the rate on it is much lower than the other accounts? Is it still worth it? So I would say it's worth keeping hold of the account. We've just spoken already about the Virgin Money Cash ISA, which you can only get if you have a Virgin Money current account, 3%. You cannot beat that right now. That's a really good account. Certainly worth, if you're not using your ISA allowance for investments or haven't already used much of it, I certainly would recommend that as a best buy account for some of your cash. Yes, there are a few things that beat it. The Barclays Rainy Day Saver, 5.12% and up to 5K. Potentially the Santander Edge account, depending on how you account for the fee, that's going to be between 3 and 4% on that one. That might be worth considering, but again, only up to £4,000. And those regular savers, which are pretty fantastic right now, 7% with First Direct, 5% with 5.25% with Club Lloyds, and there are others around there as well. But broadly, I think it is pretty good. So I would keep, and I'm keeping my Virgin Money account for that ISA, but I'm not keeping it for savings. I'm not putting any savings in there, and I'm not using it for my day-to-day banking. So I would just keep it. You don't have to close an account if you're not using it. It can just sit there. Now, if there is a switching deal you can take advantage of, and you haven't got any other accounts you can switch from or any dummy accounts, then maybe, use your Virgin Money M Plus account for that. But I would, from my point of view, there's no requirement, there's no fee, there's no direct debits. You can just keep it there, doing nothing, and maybe switch a different account if you can. Barbara just asking, is it a good idea to open a fixed rate ISA now or wait for a better rate? Similarly to what I was saying just now about the broader fixes. Again, I don't know for certain. So we have got in a week and a half, on Thursday next week, the Bank of England are meeting again. They may well put interest rates up again. Their expectation that they probably will, and it will continue a few more times and maybe peak around 4.5% next year. These things can always change. But that's already been anticipated. And often when these rates are set, they are factoring in where rates are going to go. So it could be that they are as good as they're going to get. I haven't looked as closely at the ISA market right now, the ISA rates, and where they've been going, if they've been going up or down, as much as I have with the kind of the non-ISA ones, because the rates have been so much better on the other fixes. Miniman says, evening. Nadine says, hi. Hello, guys. Nice to see you back again. Let's just head back over to here. Lots of ISA questions coming through today. So maybe that's something I need to sort of do some more content on for you all. So XGen87X says, hi, Andy. Can you have a cash ISA, a lifetime ISA, and an investment ISA? So briefly touched on this before, but yes, you can. You can pay into one of each of those each financial year, up to one of each. So you can have also one called an innovative finance ISA. Well, that's pretty rubbish. I wouldn't bother with that one particularly. But the amount of money you pay into all three of those combined in a financial year cannot be more than £20,000. So the lifetime ISA, obviously that has its own cap of £4,000, but that is within that broader 20 as well. So yes, you can open up new ones, pay into all of them, and that might not be a bad idea to mix things about. But you don't. You have to kind of, again, not open more than one of them, not pay into more than one of them in a year. Diana says, hi, Andy, which account is better to keep, Halifax or First Direct? Thank you. Oh, that's a very, very good question. So it depends where you're coming from on this. I'm going to approach this from a financial, as in like the reward situation. Which one's best in terms of the money you can get? So you can get, with the Halifax reward account, I assume it's the Halifax reward account you're talking about, as we mentioned, £5 a month, so 60 quid a year. But you can also open up a regular saver paying 4.5%, and you can put £200 into that max every month, I think, maybe 250. I'm not sure what that adds up to as an interest rate. Let's say it's 200 quid. Maybe another 40 quid you're getting that over a year. Is that right? The First Direct only really has a regular saver, no other bonuses, but that 7% one, if you put the full £300 in every single month, you're going to end up with 135 quid at the end of the year. So which probably, I know I haven't done the maths at all there on the Halifax regular saver when you're factoring that in. In fact, you don't need the current account for the Halifax regular saver. So let's ignore that completely. We're just talking about the £5 monthly reward or the interest on the regular saver. If you can put the money into the regular saver every single month, the First Direct one is going to win out there. But I would say, as I said before, we talk about Virgin Money, why not keep them both? And if you're taking advantage of the regular saver and the reward, and just get a dummy account from another one, open up an extra Halifax account from within the app. There shouldn't be a hard credit check. That hasn't been for me and for many of you. Open up an extra one of those. If you want to switch that one, switch that one. Minimad says, savings pots. Zopa currently have these. Are any other providers thinking of offering this type of savings account that you know of? So Zopa are the only ones that do this in terms of offering decent amounts of interest. The whole idea of saving pots and spaces and vaults are quite common in a lot of the fintech apps, and many of the other banks are trying to sort of compete with that as well. But as far as I'm aware, in terms of making them decent savings options for you, not really. Chase Bank, obviously 2.1% you can get in as many of the accounts you can set up in there. And that works effectively the same way, but you can have a sort code and an account number for each of those separate pots, which can make things a little bit easier. There are rumours that Starling may move into the savings market. As soon as they do, I will obviously let you know. Hi, Andy. This is from Adam. It says, hi, Andy. Monzo seems to offer some decent savings rates through different banks. I got a 6-month fix a few weeks back at 3.6%. That's interesting. I haven't actually looked at the Monzo rates for a while. I wonder whether that is on one of they've reserved that feature for one of the paid tiers, because the free ones weren't so good, but it's worth having a look at. So thanks for that, Adam. I will check that out. Check Insta again. Just doing more questions going through there. So Fayette's5 says, hi, Andy. Why did Metro Bank never have any bank account switch incentives? They actually did. And it was, I think, 2 years ago, maybe 3 years ago. 3 years ago would make sense, 2019, rather than during the pandemic. And they had a refer a friend offer of 50 quid, and you could do it about 5 times. And that ran for about 6 weeks, and they've not brought it back. So maybe they thought they'd give that a go. And I wouldn't be surprised if a lot of the people who switched to it, then maybe didn't stick with them as a bank and then switched off elsewhere. So maybe they're thinking it wasn't worth the time and the money if they didn't actually then retain enough customers. But yeah, if they do, I will obviously let you know here on the channel, on the socials, on the newsletter, on the blog, all of the usual places. Ifran says, I love you, man. Well, I love you too. Given the other money expert on TV and run for his money, my Halifax are killing me, £17 per month. You're getting charged £17 a month for your Halifax account. So this then suggests you've got one of the ultimate reward account. Okay, if you are using that for the insurance policies, then great. Although I would suggest you look around at other what they call packaged accounts, which have travel insurance, car breakdown cover, often mobile insurance cover as well. You can get them for less. You have to compare the policies, check they are covering what you need them. You might find some of the cheaper ones is European travel rather than worldwide travel. If you don't need any of them at all, and you've just got that to get the £5 reward on the switching bonus, just downgrade it to the normal Halifax reward account or downgrade it to a free account. You don't have to stick with it. There's no contract that says you have to keep paying that £17 a month. Art Dine says, I have 40k and I want to find the best easy access savings account. Any advice? I'm looking at Coventry Easy Access at 2.3 or so %. So what I would say to any of you guys, you'd want to find out what the best savings accounts are. Head to becleverwithyourcash.com/savings. This is the best buy tables on my website. I update it in the morning and again in the afternoon or the evening, normally twice a day, sometimes more, with the best options out there across a huge variety, whether it's regular savers, easy access, fixes, ISAs, all that kind of thing. And that's where you will find the best ones right now. Off the top of my head, for an easy access account, you can beat 2.3% quite easily. A lot of them will require you to use an app though. If you're not comfortable with app banking, so Tandem and Atom, and then there might be others. If you want something slightly more ethical, then absolutely building societies, they are a good shout as well. So Coventry Building Society, 2.3. They do have a higher one paying 2.85%, which has, I think, 6 withdrawals a year. So it depends how often you want to dip into it. And in fact, if you are happy to have limitations like that, you might be able to nudge closer to 3%. But again, do check out that becleverwithyourcash.com/savings. That will have all the best options for you. Darren says, hi Andy, I have just started a switch to Halifax. I was wondering, do reoccurring payments from your card, for example, Netflix, count as a debit card transaction towards the £500 payment? Yeah, paying with your debit card. So they will do. I am going to do, I'm hoping this week, depends how things go, a bit more sort of deeper dive. I can't believe I said that, a deeper dive. I'm going to do a proper sort of look at an article and a video about the Halifax rewards, because there have been some changes. I spoke about it on the podcast today. If you haven't listened to that, that's called Cash Chats. You go to podfollow.com/Cash Chats. That will take you, open it up in whatever your favorite podcasting app is on your phone. I spoke about it a little bit in detail there, that Monese has changed. One of the hacks to get that £500 payment was to send money to Monese. That's going to be harder now, but I'm going to be doing more detail, so keep an eye out on that. Steve OGB again. Hello again. I've just got a new credit card with a £2,000 limit. Should I close my previous account with Capital One? There's only got a £200 limit, as I won't use it now, and I've got a bigger limit elsewhere. This is one of those questions that I get asked probably most times I do this live, every couple of weeks, and there is no set answer. I would say that there's no harm keeping it open probably right now. There's quite a small limit. It won't do you any damage if it's just sitting there. Often when you close an account, it reduces your overall amount of credit card that you can use, your credit limit, the combined credit limit, and how much you spend on that is something called credit utilization. I don't want to repeat myself because a lot of you would have heard this already. I have got lots of content talking about this already on the channel and the blog. But yeah, take £200. I don't think it's going to make too much difference either way, but if it was me, I would keep it open, because it's not so much that it's going to stop other people lending to you in the future, and it's not so much that it's going to make too much of a difference. Where it could have a benefit of keeping it is depending on how long you've had it, that length, that longevity with any kind of product, a bank account, a credit card, telecoms contract. Those things, the longer you've had them, that gives positive signs. So if you've had it a while, that's probably the reason to keep it. Again, there's no real set answer. It's a real up a yes and no sometimes to that kind of question. Okay, Brazil Jim says, hi Andy, I put my money into a lifetime ISA at approximately 25k. Fantastic. I'm now in an incredibly fortunate position to buy a property outright. Should I get a small mortgage to avoid the penalty? I see what you're saying, because otherwise that cash is locked away, isn't it? Yeah, probably. I mean, you have to look at the maths for that. That's probably quite an unusual situation, though, isn't it? I mean, there are benefits to having a small mortgage as well. It could help with your credit profile as well, your credit report. So it may be worth getting something small for a small amount of money. And if there may well be some work you need to do on the property, you've got a little bit extra cash there available to you. Obviously, you're going to have to pay it off. But, you know, that lifetime ISA of that 25K, obviously, a big portion of that is free money from the government. So you may as well take it. And if you get a mortgage which you can overpay, a short mortgage and one that you can overpay with no restrictions, make sure there's no early redemption penalty, then if you've got the cash, you can just then wipe it all out. You just got to bear in mind, obviously, there's a lot of admin that goes into a mortgage when you apply for one, which isn't fun. And they'll want to see all your old bank statements and they want to talk for this and get back and forwards, and it can be a bit of a nightmare. But yeah, it's probably worth doing that. Foysha says, Crew are offering 2%. And this is a new bank. I'm going to look into more detail. I'm going to try and get access to it so I can do a proper review. An actual bank who's got the proper license, unlike Revolut and Monese, it's actually been approved as a digital bank. They're offering 2% interest on savings up to 85K. I don't know what, I'm not excited about it because you can beat that very easily. But interesting to see what they do, and they may well have other kind of initiatives that make it a standout bank. So once I get a chance to look at it, I will let you know. If you guys have got any thoughts on it, do let me know. I'd love to hear them. Aaron says, I noticed HSBC advanced eligibility has been updated. You no longer to pay in the $1,750 a month. Yeah, this changed very recently. That makes, in theory, makes it easier for you to get the account. So Aaron says, would I be able to switch to it as an existing normal HSBC current account customer for the bonus? So sadly not. So the terms and conditions for the HSBC switching offer are that you cannot have had an HSBC account or actually a First Direct account since sometime in 2019. Off the top of my head, I want to say April, but it could be a different date. So that will rule you out. You've got an account, you can't get it, sadly. I have got a whole analysis of that switching offer and all the others over on the blog, becleveryourcash.com. So make sure you do read that. And obviously then when you click through, just in case things have changed, read the terms and conditions on the page as well. So sadly, you are going to miss out. Simple Guy says, why do most humans who pay by card love being tracked and traced by the government? It's mental. Yeah, and also, I mean, you could take the same approach about loyalty cards, couldn't you? How much the supermarkets, Club Card and Nectar, what they know about us as well. That's the data. There's a lot of data out there. Yeah. Let's just check Instagram again. Okay, Tina's come back to one of the questions she had earlier on. Okay, this is a good point here. So I still don't understand, sorry. Is a flex ISA supposed to only be for the current year? The full limit is still listed and understood. If I put it back in before the new tax year, is that okay? Okay, so this is different, slightly different. So if the old ISA that you have, remember we were talking earlier on about transferring ISA where you should never take the money out to put it into a new one. If the old ISA you have is something called a flexible ISA, that does mean you can take money out of it and put it back in without it impacting your allowance for that year. And I'm not 100% sure though if that still relates to the cap. In that case, and if your old ISA is a flexible ISA, then you could put your money back into there, into the old account before you transfer it across. But again, this is a moot point. It depends how much you've got in there. If you've got less than 20K and you're not going to put more than 20K in total into the new Virgin ISA this year, it doesn't make a difference. But it's only if you've got larger amounts where that becomes an issue. Abdullah says, hi, sir. Hope you're well. Yes, Sam. Thank you very much. And what else we've got going on? Nipkester says, you're a legend, Andy. Hope you got told that enough. Thank you very much. That's really kind of you. It's always nice to know that I'm helping you guys. So Tugberg says, hi, Andy. Enjoying your channel and your content. In an investment ISA account, what strategies can be followed to move money into different investments, e.g. different index funds? Would selling and reinvesting take away from the annual 20K tax-free allocation? So when your money is within an ISA itself, if you invested in the ISA, then selling different index funds or shares within that ISA and buying new ones within that ISA, you are not taking the money out of the ISA. You're only taking money out of the ISA when you put it into cash and withdraw it. Okay, so you can move and sell and trade all those things within the ISA. That's fine. If you do want to move it from ISA to ISA, then the transfers for for some reason, different provider, maybe it's got lower fees, then that does get slightly more complicated. You can transfer them across. Sometimes though, they will revert it to cash, move the cash across and then reinvest it. And sometimes there's a thing called bed and ISA. So look into that for more information. So make sure you don't, again, fall foul of that, because if you do withdraw the money, then there may even be capital gains stuff that comes into there as well. Craig says, hi Andy, you're my go-to guy for advice. I've got 5K and don't need to touch it for a year. What is the best deal I can get? I'm a nationwide customer, thanks. So if you absolutely want the guarantee of the rate you're going to get, then put that in a 1-year fix. 4.3-ish is what you're going to get right now. If you want a little bit more of a risk and you're happy to open up a current account, I would be looking at opening a new account with Barclays. You do not need to switch to this. You just open up a new account, current account that is. Add on something called Blue Rewards. It's a bit of a faff. You have to pay £800 into that account every single month. Doesn't have to stay there. You can take it straight back out, but £800 has to go in, and you have to have 2 direct debits coming out of that account. You also have to pay a £5 fee every single month, but those 2 direct debits, they will earn you a £5 reward, which will go into a reward. I told you it's a bit of a faff. Will go into a reward wallet, which you can then cash out and transfer to your account. So you're going to be even from that. It's not going to cost you anything. You'll pay £5, but you'll get it back. And the £800 in doesn't have to stay there. Once you have that, you can open up something called a Blue Rewards Rainy Day Saver. And I mentioned it earlier on, 5.12% interest on up to 5K is a variable rate. So they could change the rules at some point in the next year, which is why I said, if you want certainty, maybe go for the lower fix. But if you're willing to take the risk, then that's going to make you the most amount of money on that in the next 12 months. So Hannah M says, hi Andy, thank you very much for your great content. Any recommendations on which credit card to pick for a first-time user, please? So this is the question I used to get all the time. I haven't had it for a while, but it's a really important one to think about. And you could go through, check out, same sort of question where people say to me, what do you think of Capital One? What do you think of all these different banks that have credit cards? Ultimately, the best first credit card is going to come down to the one you're most likely to get, because the point of getting a credit card in the first instance, I'm sure for many of you, is to try and build up some credit history to show you are responsible with borrowing, and that will help you in the future to get the better deals on other things which might be more beneficial to you. Now, the way to do that would be going onto a comparison site and maybe even look at 1 or 2 comparison sites, because they don't show you the whole market. They're only going to show you the cards they are paid to promote or pay to get a commission from on the whole anyway. And they will give you your chance out of 10 eligibility search on these comparison sites, your chance out of 10 or a percentage out of 100, or which ones you're most likely to get. And if any of them say 100%, I would go for that for your first card. Just get that. Now, if you've got lots of choices, or they're all 8 out of 10, or all 6 out of 10, or all 4 out of 10, whatever it might be, then maybe then it's worth looking at some of the other benefits you can get, like cashback and like rewards. But that should be secondary. If you can get one of the best cashback cards, and I've talked about those over on the blog, got a list of those. And do you know what? In January as well, I'll be doing big updates on the best cashback cards, the best credit cards, all these kind of things, particularly at that time anyway. Then go for one of those. That would be great. But make sure, really, really importantly, when you do apply, eligibility search, and that you also set up a direct debit to pay off the full amount every single month. You do not want to get charged interest on it. And a direct debit means you won't forget. Just obviously make sure that you've got enough money in your current account to pay that when that direct debit comes out. Hope that was useful. I have got a load of videos about first-time credit cards actually on the YouTube channel, so check those out. We have got 2 minutes. Oh my goodness, loads of questions. Let's see what I can do in these really, really quickly. Remember, head to the Facebook community, becleveryourcash.com/community to ask a question if I haven't been able to get around to it today. Diana says, can you cover the best cashback offers from different banks in a dedicated video? Yes, I will be doing that soon. Starling savings rate, don't know much about it. As soon as I do, I will let you know. Okay, question here about I haven't got time to do it, but the £5,000 starting rate for savings is calculated. Again, head over to the Facebook group, ask it there. Okay, guys, I'm not going to have time for many more of these. Dana says, is it worth putting money into both a LISA, a lifetime ISA, and a Help to Buy ISA? Potentially. So if you are under the age of 40, if you're 39 or less, you can open up a lifetime ISA right now. And a lifetime ISA has a lot more flexibility in terms of the property you can buy. You can get up to, I think, £450,000 is the value of the property. The Help to Buy ISA has a lot lower value. You might find it much difficult to redeem that. The difference is the Help to Buy ISA, if you don't use it, you get that money back. Yes, you lose the deposit, or not deposit, you lose the bonus, 25% bonus from the government. You lose that, but you don't get charged anything. The lifetime ISA, if you do not use that for a house, you either pay a penalty to get it out, so you'll lose money, or you have to wait till you're 60. Now, you cannot use both for a property. So really, I think you can transfer one over early on, but really it's about making a choice which one's going to be best for you. And with that, I think I am going to have to call it a day, guys. So sorry I couldn't get through any more of these today. Oh, last one. Thanks, Andy. Last question. When are you bringing out the Christmas jumper? I'll do one more of these, one more live before Christmas. So maybe we should all wear Christmas jumpers for that one. It'd be in, I don't know, a week and a half, 2 weeks, something like that. And that could be our Christmas party. Guys, have a lovely rest of the evening, lovely rest of the week. And again, head to the Facebook community for any questions that I didn't get around to answering today. Cheers.